You don't have to spend hours researching individual companies before you can start investing in the Nigerian stock market. And instead of trying to decide whether to buy GTCO or Zenith Bank or MTN Nigeria or Airtel Nigeria or Dangote Cement or Bua Foods individually, you can own a little piece of them all through a single investment. Even better, you could start with a relatively low, small amount of money. Reduce your investment risk and still position yourself to build wealth over the long term, because that's exactly what exchange traded funds, better known as ETFs, allow you to do. In today's video, I will show you 5 Nigerian ETFs every investor should know. We will discuss what each one invests in, why people invest in them, and how you can use ETFs to build a diversified investment portfolio without needing millions of naira. But before we begin, if you're new on this channel, you're welcome. I'm Helen, a money enthusiast and a financial literacy advocate. Here we talk about saving, we talk about investing, personal finance, and practical ways to build wealth in Nigeria. If that's the kind of content you enjoy, don't forget to subscribe and turn on the notification bell so you don't miss any future videos. Now let's get into it. What exactly is an ETF? Before we start mentioning different ETFs, let's first understand what an ETF actually is, because many beginners hear the word ETF and immediately think it is something, complicated. It is actually one of the simplest investment products you can own here in Nigeria. ETF simply stands for Exchange Traded Fund. Let's break that down in very simple terms. Imagine you want to invest in Nigeria's biggest companies. You decide to buy maybe MTN, then you buy GTCO, then Zenith Bank, then Dangote Cement, then Bua Foods, then Airtel Africa. Before long, you will keep buying many different companies individually. So apart from needing more money, you will also pay transaction cost every time you buy another stock. Meanwhile, an ETF solves that problem. So instead of buying all those companies one by one, you simply buy one ETF, and that ETF already owns shares in many of those companies. So with one purchase, you are automatically investing across several companies at the same time. That is one of the biggest advantages of ETFs. Now let me quickly address this mistake many beginners make, which is, asking which company they are to invest in or trying to predict which company will become the next big winner. The truth is, nobody knows with certainty which individual company will perform best over the next 10 or 20 years. Even professional fund managers with years of experience sometimes fail to consistently outperform the market. So instead of trying to guess the next winning company, many successful investors simply buy the market itself. In other words, they buy ETFs that already contain many strong companies all together. So as the economy grows, the businesses continue to make profits, and as companies expand, the value of those ETFs also has the potential to grow over time. That is one reason many long-term investors prefer this. All right. Now let's look at the first ETF on today's list, the Vetiva Griffin 30 ETF. This is one of the most popular equity ETFs available in the Nigerian stock market. The purpose of this ETF is very simple. It tracks 30 of the biggest and most actively traded companies listed on the Nigerian exchange. Talk of banks, telecommunication companies, industrial companies, consumer goods companies. Many of these companies are represented inside this ETF. So instead of buying all those companies separately, you simply buy one unit of Vetiva Griffin 30 ETF, and immediately you gain exposure to a diversified basket of some of the Nigeria's strongest listed companies. One thing you might not realize is how expensive it will be to buy all 30 companies individually. Some of those shares cost hundreds of naira per share, and others cost much more. Now imagine trying to build that same portfolio yourself. It will require significantly more capital and much more effort. But with this ETF, the fund manager has already done that work for you. for us. Your responsibility is simply to buy units of the ETF. Another advantage is that the companies inside these ETFs are reviewed periodically. That means if a company can no longer meet the requirements of the index, it can be replaced by another stronger company. So the portfolio still remains focused on the leading companies in the Nigerian market. If you're someone who wants broad exposure to the Nigerian stock market without having to research dozens of individual companies, this ETF is definitely one worth learning about. As of the time I'm making this video, a unit of a Vetiva Griffin 30 costs only 109 Naira per unit. Isn't that just great? Owning shares of 30 strong company at that rate. So if you choose to invest maybe 10,000 or 20k or even 5,000 monthly, just imagine what your portfolio will look like in 5 or 10 years. The second ETF on my list is Stanbic IBTC ETF 30. As at the time I'm recording this video, one unit trades around 2,350 Naira. Although the price can change every trading day depending on market demand. And just like the Vetiva Griffin 30 ETF, this fund also tracks the NGX 30 index, which represents 30 of the largest and most actively traded companies listed on the Nigerian Exchange. So instead of buying individual shares of GTCO, of Zenith Bank, of MTN Nigeria, of Dangote Cement, of Bua Foods, and many other leading companies, one after another, you can simply buy one unit of this ETF and gain exposure to all of them. One thing I also like about this ETF is that it is managed by Stanbic IBTC Asset Management, and they are one of Nigeria's leading asset management companies. Now, I want to point out something important here. Even though both the Vetiva Griffin 30 ETF and Stanbic IBTC ETF 30 track the same NGX 30 index, that doesn't mean they will always have exactly the same market price. Each ETF has its own number of units in circulation, its own expenses, and its own demand from investors. That's why one can trade at much higher price than the other, even though they follow the same index. I hope you get that. So don't assume that because one ETF is cheaper per unit, it is automatically the better investment. Always look at what the ETF tracks, who manages it, its fees, and how closely it follows the benchmark. The third ETF I want to talk about is the Greenwich Alpha ETF. At the time of recording this, one unit costs around 1,000 Naira. Although, like I said, this price can change whenever the market is open. Like the first two ETFs, Greenwich Alpha ETF also invests in quality Nigerian companies across different sectors of the economy. Its objective is to give investors broad exposure to the stock market without requiring them to buy dozens of individual shares. One reason many investors like ETFs such as this is because of cost efficiency. Let me explain that. Imagine you decide to build your own portfolio by buying 20 or 30 different companies individually. Every time you buy a stock, your broker charges transaction fees. You pay fees again when you sell. Now imagine repeating that process for 30 different companies. Those costs can add up over time. But when you buy one ETF, you are buying one diversified investment instead of making 30 different purchases. That doesn't mean ETFs are free. They still have management fees and trading costs. However, for many investors, especially beginners, buying one ETF can be a much simpler and more cost-effective way to gain diversified exposure to the market. So another advantage is that professional fund managers monitor the portfolio and make adjustments to ensure that the ETF is aligned with its investment objective. Instead of trying to manage dozens of companies yourself, you allow experienced professionals to do that on your behalf. Now let's move to something completely different from what we've been talking about. The fourth ETF on this list is the NewGold ETF. Unlike the other ETFs we've discussed, this one does not invest in company shares. Instead, it tracks the price of physical gold. Like it is a commodity ETF. I talked more on this in the previous video before this. You can check that video after watching this. And if you've not liked this video yet at this point, kindly do so as this helps the channel reach more people. Alright, back to our discussion. As at the time of recording this video, one unit of NewGold ETF is trading for approximately 139,000. It is more expensive than other ETFs on the list, But remember, the price of one unit doesn't tell you whether an investment is cheap or expensive. What matters is the value of assets behind it and whether it fits your investment goals or not. So why do people still invest in gold? Gold has been used for centuries as a store of value. When inflation rises and the purchasing power of money falls, gold has helped people preserve wealth over the long term. Now, this doesn't mean that the price of gold only goes up like every other investment. It can also fall. But gold behaves differently from stocks, okay? So you can include it in your portfolio to reduce overall risk. Think of it this way: if the stock market is having a difficult year, gold may perform differently. That is why many experienced investors don't put all their money into stocks alone. They combine stocks investment with assets like gold to create a more balanced portfolio. The fifth ETF on today's list is the Vetiva Banking ETFs. As of the time of recording this video, one unit trades for around 29 Naira. Oh my God. Yeah, you said you don't have money to invest. Just let's continue. This ETF is different because it focuses specifically on one sector, which is the Nigerian banking industry. So instead of investing across different industries, it invests in some of Nigeria's leading banks. That means when you buy this ETF, you are getting exposure to banks like GTCO, like Zenith Bank, like Access Holdings, like UBA, and other qualifying banking stocks included in the index. So why should you choose a banking ETF? Because banks play a very important role in every economy. They make money by providing loans, facilitating payments, investment services, managing deposits, and supporting people's businesses. So as Nigeria's economy grows, the banking sector also has the potential to benefit. Of course, banks can also face difficult periods, which is why it's important to remember that sector-specific ETFs can be more volatile than broader market ETFs. But if you want exposure to just one industry because you believe in its long-term prospects, then a banking ETF can be worth considering. Now, before you rush off to buy any of these ETFs, these are important things I want you to understand. The ETF itself is not what makes people wealthy. No, your investment habit is what makes you wealthy. Some people still think they can buy an ETF today, wait for a few months and suddenly become rich. That is not how long-term investing works. Wealth is usually built through consistency, patience, and discipline. Another mistake many people make is trying to predict when the market will go up or down. They keep saying things like, I will wait until prices fall before I invest, or I will buy only after the market start rising. The problem is that nobody can consistently predict the market. I said this earlier. Even experienced fund managers with teams of analysts don't always get it right. By the time you think you found the perfect time to invest, the market may have already moved. So simply invest regularly, whether the market is up or the market is down. When prices are low, your money buys more ETFs units. When the prices are high, it buys fewer units. So this strategy will help smooth out your average purchase price in the long run. This approach is often called Naira-Cost Averaging. It's simply the Nigerian version of what we know globally as dollar cost averaging. Another secret you should not overlook is reinvesting your dividends. Some ETFs like Vetiva Griffin 30 pay dividends because the companies inside them pay dividends. So when you receive those dividends, don't be too quick to spend them. Instead, consider using those dividends to buy more ETF units. So your dividends start earning dividends too, which makes your investment to keep growing without you having to do much extra. I hope you understand this. This is one of the most powerful ways compounding works. Albert Einstein is often quoted as calling compound interest the eighth wonder of the world. Whether or not he actually said those words exactly the way we are saying it, the principle is always true. Allowing your returns to generate more returns can make a tremendous difference over time. The longer you stay invested, the more powerful this compounding effect can become. If I were just starting out as a beginner, here is one simple approach I might consider. Please remember, this is not a financial advice. It is simply an example to help you understand portfolio diversification. You could invest around 70% to 80% of your portfolio in broad stock ETFs like the Vetiva Griffin 30, the Stanbic IBTC, the Greenwich Alpha ETF. These ETFs give exposure to many Nigerians' largest listed companies. Then you could consider putting the remaining 20% to 30% into the NewGold ETF. Because while stock ETFs focus on growing your wealth, gold may provide some diversification since it often behaves differently from stocks. Of course, everyone's financial situation and risk tolerance are different. The right allocation for you may not be the same as someone else. If there is one lesson I want you to take away from this video, is this. Please, building wealth isn't about finding one magical stock that will make you rich overnight. It's about owning quality investment, staying diversified, investing consistently, and reinvesting your dividends, and giving your money enough time to grow. That's how many successful investors have built wealth, not just in Nigeria, but around the world. So instead of chasing the latest investment trend or trying to guess which stock will be the next big winner, focus on building a disciplined investment habit. Over time, those small consistent investments can grow into something so significant. So if you found this video helpful, please don't forget to give it a thumbs up, subscribe to the channel if you haven't already, and share this video with someone who wants to start investing but doesn't know where to begin. Also, I'd like to hear from you in the comments. Which of these ETFs interests you the most? And what investment topic would you like me to cover next? Thank you so much for watching. Until next time, keep learning, keep investing wisely, and keep building your future. I'll see you in the next video. God bless you.